Welcome to an update for Order 33, Federal Milk Marketing Order. This is Dr. Lawrence Jones, and I'm preparing this for Nobis Agri Science, who's been great enough to support this podcast. And I'm recording this on September 30th, the last day of the Q3. So I always kind of like to start at, kind of where we are at and where we've been. So if you look at this daily spot cheese price, this is as of Friday. We had this big run up after bird flu. It kind of settled out. It ran back up. And now all of a sudden we're finding support back down here at the 22.50, 23 kind of number. Part of what's driving the industry is the global dairy trade. We had the last one on the 17th of September. We have another one actually tomorrow. But it was up just a little bit. So it hasn't had a lot of changes here. If we look overall, it would have represented about a quarter increase of our milk price. Specifically, butter was $2.91, the spot's $2.73. There may be a little bit of export there. Cheddar's at $2.02, our blocks are $2.11, so that doesn't seem like a very good export opportunity. And non-fat dry milk is $1.36 and we're $1.36. So again, not a lot of opportunities there. So we would expect the exports to be dropping a little bit. World milk price using the whole milk powder is around $15.65. This is just a graph of the global dairy trade in green and the National Dairy Sales Report in blue. Whenever we get more than 30 cents, we can expect some exports. Right now, we're just too tight. There's just not going to be a lot of exports now. I wouldn't be surprised to still see some exports to Mexico, but to put it in a container and send it across the ocean, that's too tight. So we did get the cow numbers. There were 9,325,000. This is relatively low. We were just a little bit lower than that in the middle of 2019. And ever since the middle of 2016, we've more or less been higher than that. But there's something I want you to take a look at here. 9.325 is where we were here this July, August. If we go back a year ago and say, how did it change a year ago? They were absolutely flat. And we go back 2 years ago, they were absolutely flat. So I'm expecting this 9.325 to get revised either up or down, and my gut is going to tell me it's going to come down a little bit. Overall, we're down about 40,000 cows from a year ago. Given these cow numbers, we can look at the number of replacements. I think I had it at 0.71 last month. I've got it now less than 0.75. These cow numbers were a little bit surprising. So I still think it's about 0.71, 0.72, but I'm going to hedge my bet given those cow numbers and say less than 0.75. That says that you can have a total replacement rate, right around 38%. And if you have 7 or 8% dead, you can have a call rate around 30%. So that's how those numbers kind of come together. Here is our latest slaughter data, and I'm not going to spend a lot of time on this. It's been the same. We've been low. So the last data was the 8th of September. We're about 5,600 less than a year ago. If we look at where we were a year ago, it's right here. 2 years ago is over here. So we're just calling significantly fewer animals. At the same time, the herd is actually shrinking, by about 40,000 cows. Overall, milk production on a daily basis is actually coming down a little bit. So it came up significantly through middle of 2022. It's trending down. Now, some would tell you it's up from last year, and that's probably true. But overall, I think it's a downward trend. Milk per cow has been pretty flat. Again, it rose significantly through 2022, and now it's been fairly flat. And part of that is the fact we got higher fat percentages, and we look at Order 33, we're going to see that also. But this had a significant break in 2022, and it's just rising at a much higher rate now than it was previous to that. We won't get the most recent dairy products report until later this week, but this is the one that we had for July. And you can see where disappearance is higher than actual production, and that's kind of the scenario that we were in then. If we look at the July production, it was about 38.4 million pounds a day. Our demand was 39.1. So that was, 700,000 pounds a day that we were not meeting. Our stocks to use ratio is about 35.8 days of excess cheese. We've been as high as 37, 38, somewhere in here, 38, but right now this seems to be coming down. In order to meet this demand, this would suggest that about 9,413,000 cows, which if we're at the cow numbers that I just showed you, we're going to be a little short. However, when I look at all of the data, I'm going to suggest that the August disappearance is probably less than July. Now, July cold storage was revised down a little bit, so it's probably better than what we thought, but August is probably going to be a little bit less. We'll look at just the American stocks. That seems to impact the spot market and overall prices probably more than anything. Right now, American stocks are about 57%. That's up just a tick from last month. And these were increasing, but now are on kind of a downward trend. So a question that I would put to everybody that I've been asking myself is, why would you put cheese in cold storage? So the first thing you want to look at for deciding whether cheese should go into cold storage is the forward curve. So this would suggest that you could be putting cheese in, 220, 225, and pulling it out in a year at $1.80. So that doesn't make any sense. That forward curve would suggest you're going to do anything you can not to put cheese in cold storage. There's also new cheese capacity coming online. Now, we've been talking about this for a year. Michigan's probably seen the only really new cheese plant that's been up and going, but there's 3 or 4 or 5 that are just getting ready to start producing here. And so again, why would you want to put cheese in cold storage and kind of realize that there might be a glut of cheese once these cheese plants get up and going? The other is inflation is coming down. We were as high as 9%. Now, depending upon which numbers you look at, we're 2, 2.1, 2.5, somewhere in there. And so putting cheese in cold storage at times of high inflation makes sense as an inflation hedge. But again, at 2% inflation, it probably doesn't make sense. The carrying cost is just too high. So in the short term, this is going to have some downward pressure on prices. So we're going to have cheese coming to the fresh market a lot faster than we would otherwise, simply to keep it from going into cold storage. Butter stocks were headed up fairly significantly through about 2022. They really crashed, and then now they're headed back up just a little bit, and so they're back on that upward trend. So the question is, why is this different than cheese? Well, I think the biggest thing is that we've just got higher fat percentages in milk. So as we are skimming, for example, fat off of fluid milk, we sell milk at 3.25 as whole milk, and we produce it at 408 or 409. We just get a lot of cream, and that cream goes somewhere, and a lot of times it's going to go into butter. So overall, when I look at the state of the milk market, I think these replacements are just going to continue to be a big issue. Milk per cow is trending down in favor of components. We're hearing about a significant impact of bird flu in California. So that is also going to impact production per cow out there a little bit. Components continue to increase. That just makes a lot of sense. And cheese stocks are coming down, which is probably going to depress prices here for just a little bit. So we just finished up August, and we'll actually just finish up September here tomorrow, but we won't have that data here right away. So when we look at August, it actually increased about $2.41. For quite a while, I said, the best thing you can do is sell all your milk 6 months out. But I think the real answer, the best thing you could do is not take a real big position that you can't get out of. And so the carry in the market, was fairly negative for a long time, but then we have just been pushing this into a bull market, and that continues to be true for a while. And then we've got this emotion index, which tells us, how much noise was in this before it actually began in what I call glide path. And it was fairly high, and I think the next 2 months are all going to be fairly high. So we've still got a lot of emotion built into this trade. Look at the order 33 data. Your statistical uniform price was $21.72 with $1.06 PPD. Again, that's going to be basically in Cleveland, so you may be 10 cents lower than that. But that was up 51 cents from last month. And again, these are some very good historical prices. They're only this time in 2022 that we were above that. Order 33 did see significant class 4 depooling. Only about 2 million pounds a day went into class 4. We've seen as high as almost 12 million pounds, but that makes sense because class 4 is significantly higher than class 3, so they're going to depool that. And just remember, that's going to give you a lower milk check, but you're going to get a depooling check from your handler. Is this going to continue? Well, probably not for a while for class 4, because for the next 3 or 4 months, class 3 is higher than class 4, and it's going to be more than 75 cents. So we're expecting to actually be depooling class 3. Whenever in this 75-cent difference between the two classes, we're not going to have much depooling. So we'll have 3 or 4 months when we have basically no depooling. And then we're going to start depooling class 4 pretty heavily. Also with those August data, we can kind of look at 2024 versus 2023. And right now on a 50-50 blend, it's about $2 higher than last year. Now, when we started the year out, we said $1.50 to $1.75, but we've gotten much better than that at this point. So the difference is, closer to $2. Order 33 had very high fat percentages, 405 versus a year ago, 394. Again, almost 10 ticks there. And, you can see that this has just been going up constantly, so you're consistent with the rest of the nation. Protein was 317. That came up from 313. And what I see here is that the lows are actually increasing probably more than the highs. And so what you've done is you've figured out how to keep the protein a little bit higher, but not necessarily push it like we do fat. And it's much more difficult to do that. So the weekly National Dairy Sales reports have been pretty well headed up. The blue line is the predicted, and the orange line is the actual. So we can see that we've come up. Again, we saw this, that it came up after bird flu, settled out, and then has gone up. So nothing different that we'd seen previously. But the question I'm asking is, I plot out the National Dairy Sales report in red, okay, and the spot market in blue. So right now the spot market has gone absolutely crazy, but it's starting to come down just a little bit. And so the question is, historically, when we hit these peaks, National Dairy Sales report actually came up over top of the spot market. It did it there, it did it here, a little bit here. And so the question is this National Dairy Sales report going to come up and do this? I highly doubt it. I think it's going to kind of cut that off. But we need to keep an eye on this because we could see a little bump up in prices here for a little while. So we'll turn to the spot market a little bit. This barrel price has been falling and the block price has been coming down. Now today, which is not included in here, we had a significant drop in barrels over 15 cents. But they actually found support for both blocks and barrels right around this 212, 213 kind of number. And right now the market is actually up fairly strong, with November up 38 cents. So this drop was more of a realization for the trade to say, okay, now it's time to get rid of this speculative stuff and start figuring out where we're going to be. So I've kind of put in for numbers to be thinking about 220 on cheese. That's just a little bit higher where that spot market is. And so that gives me numbers to keep in my head around, class 3 at a low of around $22.15 and class 4 a low around $21 or somewhere in there. On Friday, that's, about where November was trading now. They're trading up a little bit here right now. Even though this looks like it's got a lot of variability and it's only a 1 cent difference in whey, just as bouncing between 59 and 60 and not moving very much. Butter has been, kind of coming down. I said it, 275 kind of guy, but I'm not sure I want to believe that anymore. And today we had a significant increase in butter. It was up 7.25 cents. And so this has kind of come back up, and it was on fairly heavy trading, about 16 loads traded today. And the thing I keep an eye on is these cream multiples. They're at 1.34. I've seen them as low as 1.28 on the high side, so these are still fairly strong. And then if we look at the basis for spot loads in the upper Midwest, we're still as high as $3.50 over Class 3. Now some have been a little bit lower because there was availability of milk, but overall, right now the availability of milk in the upper Midwest seems to be related to whether cheese plants are closed for maintenance or not. Non-fat dry milk has been very, very strong. Normally we consider about 10 cents below the global dairy trade, and this has been above the global dairy trade. And there's a couple of reasons, why this could be, obvious, domestic demand could be good. We could have had some exports that are still kind of pulling together there. And the other is there is some evidence that mozzarella is very, very strong. And in order to get the low-fat mozzarella, what they do is take non-fat dry milk and add it to the vats. So that might be accounting for some of this non-fat dry milk. Now, tomorrow we're going to have a global dairy trade, so we'll have a better idea if this is way out of line or not. And as we look at butter and non-fat dry milk, kind of changing values, prior to 2022, butter was the stepchild, and then it got very strong relative to non-fat dry milk, but right now this is coming down. But with today's action, it should be kind of finding some support here. So overall, when we kind of look at these prices compared to last week, Class 3 came down 23 cents. And largely that was due to fat. The fat prices came down from about 9 cents and off of those highs. Protein prices are very strong. They're above $3 here for just a little while, and they're at the highs that we've had. Remember, September was clear down here at $1.50 at one point. We were really struggling to get to $3. We had a doubling in the price of protein. Other solids didn't move very much, and they're just kind of following that way at being fairly stable. Class 4 was a little bit different. It actually came down fairly sizable. It came down 59 cents. A lot of that was butter, which came down 7 cents off of those highs. We saw that a minute ago. And non-fat dry milk came down 3 cents. So just kind of finish up on the other side of the ledger with grains. Strong week for the soybean meal, up 22. Did just have the grain stocks that came out. And it looks like corn is trading a little higher and beans a little bit lower. But nonetheless, if we look at the soybean channel, we talked about locking up our soybean meal at 340 when this dropped down here. It's like, Larry, you just kind of gave some bad advice there. But now we're back up to 345, and this has got some legs on it. So if you haven't got your soybean meal locked up, I definitely would take a look at that. Corn was up about $5 a ton. 156. I got some calls last week. Somebody saying, should we be just locking this corn up? And my answer is, there's a lot more upside than there is downside. I can't guarantee you that this is the low at 150 on the board. You're going to have to add basis to this, but I would take a serious look at that corn price. Weather has been very interesting. We've been having ridges at different parts of the country, and right now Michigan looks like it's going to be fairly normal, but the Southwest is going to be very hot and very dry. And again, the order 33 looks like it's going to be near normal. And if you want to be, kind of following what's going on with the weather, again, kind of get oriented. This is some really cold water up here off of Alaska. Now everybody's talking about La Nina and El Nino, but what's driving this right now is this cold. The jet stream comes underneath it, comes down, comes up, comes down, comes up, and so we end up with these ridges. These can continue to slide back and forth. Of course, the big news was the hurricane. We have a lot of dairies in this area that really took a brunt hit of this. And here's a picture from a friend of mine that's in Live Oak. Their barns were just absolutely devastated. The old parlor got blown down basically, and they've just got just a tremendous problem. And we've got several large dairies that were right in the path of this. So if we look at the drought monitor, overall, Michigan looks reasonably good. It's that central Ohio, southeast Ohio that's really, really dry. But overall, the grain belt looks, pretty good on the western end there. And the other thing that's been impacting grain sales is the Mississippi River. But prior to the hurricane, we had those storms roll up through the Midwest. And so this has actually turned up. And so right now we're about 4.5 feet below low stage level, but that's not as bad as it was for a long period last year. So that's my program for this month, and I appreciate you watching it, and I will get you another program next month.